helping you to weather good and bad economies without putting retirement on hold. This is the Tumolo Financial Podcast with Ken and Nick Tumolo. Ken and his son Nick know that creating a comprehensive financial plan can align your hard-earned life savings with your retirement goals. Consider them your retirement architects. Now, the Tumolo Financial Podcast with Ken and Nick Tumolo.
Now, Ken, the stock market has seen some very down days. I mean, it's the elephant in the room. We got to talk about it. And a lot of this is a reaction to President Trump's tariffs, which many worry could reignite inflation. I want you to take a listen to CNBC's Jim Cramer after a day of heavy losses recently.
Today was horrendous and, again, unnecessary. We do not need to end up on the canvas every day like this. If the president already knows what countries he's going to hit and what products will be made more expensive, perhaps German, Japanese, Korean cars, there'll be more pain, but it can be planned for. Tell us now. This is a mess.
Well, and obviously this could make people nervous, Ken, and Wall Street is in correction territory now. So what is your opinion on this? Is a bear market next, or what are you telling your clients at this point?
The Jim Cramers of the world.
Right.
So they create excitement, and there's a reason why they're on TV is because it attracts viewers.
Entertainment.
Entertainment. I mean, and he's like, when you watch a show, I mean, that's what it's all about. Like, you call in about a stock, and then he makes a big deal about the stock. And there's times when I don't even watch him because there's things that, like, he'll bring up stuff and then he's completely wrong. But but we're all wrong at times about the market. It's just that, he's, the one on TV and entertaining us. But that's the issue. News. And you've got a lot of news around everything that's going on. Back in January, I had a chance to see, it was actually 3 investment managers. One of them was more of an economist. And their take on the whole tariff thing was there should be short-term issues from it, but the dust should all settle, is kind of how they put it. And when they were giving numbers, all 3 of them were pretty much the same, and they were at different conferences. But for every 1% in tariffs, they figured 0.1% in inflation, which now gets scary because now we're going to add inflation back in the mix. But then what they went on and said is, well, the Fed has that tool of being able to lower interest rates or higher interest rates to control inflation. And we all remember 2022, what happened. Interest rates went up and everyone lost money in their 401ks. Both the bond side of it and the stock side of it lost money. But the thing is now they're high enough where, with President Trump and his administration adding tariffs, as all this goes through, what will probably happen is they just won't lower interest rates as quick as everyone thought they would. And that has an effect. The effect is slowing inflation. So if we're saying tariffs are going to raise inflation, but they're keeping interest rates up where it should slow inflation, they don't know the exact formula, but we're going to be somewhere in between. So we're kind of, one group's fighting it, one group's adding to it, and it's okay. That's what the Fed's there for anyway, because if you think about it, if Trump didn't get in and Harris got in, the thought was that she would probably raise taxes, and if they were to raise taxes, that usually slows the economy, so the Fed probably would have lowered interest rates to get the economy going. So best way to put it is they've got that tool that they can look at, leading into an election like what we just had, and with 2 different candidates that had 2 different things that they were going to do and would affect inflation differently, they have that tool there to help control it, is the best way to put it. Mm-hmm. So knowing that, going into this, my opinion is we have to let things settle. One, we've got a pretty good economy, pretty good market, and yes, the tariffs are adding a little bit of a mess, but it's really the fact that it's a lot going on at one time. Because you've got that. You've got the tax laws that are ending this year. I mean, I was sitting in with a client this past week and like, Ken, there's a lot going on. What should we be doing? So it's clients are talking about it. People coming in from the radio are talking about it. And the thing is, it really at the end of the day, with so much going on heading into retirement, you should already have a retirement portfolio to begin with. And what I mean by that, it should be structured for retirement, not all out risk. Because if you're all out risk at this point and the market is struggling, you're probably losing some money. And basically, if you're not doing something to counteract that, then pretty much that's all you're doing is losing money. So it's kind of structuring. You want to structure your portfolio for retirement retirement, meaning in good markets, you have a place to draw from. In bad markets, you have a place to draw from. You're not putting life or your retirement on hold. And that's the biggest thing that we do. And so when I was sitting down with my client and talking to them, really all it was just reviewing again, what we've put together. And they're like, "Oh, Ken, I already know that. I just wanted to bring it up because it's something." But they're already comfortably spending. And the thing is doing 6-month reviews, reviewing the plans every 6 months, showing people where they are, helping them when they're not sure if they can spend more money and showing that they can spend more money. All you're doing is making people comfortable. And when people are comfortable in retirement, they enjoy it. That way they're not staying up at night. Should I be selling this stock? Should I be buying this? And then in the next morning, looking at what the market's doing, and that's all they're looking at. I mean, that doesn't make for a fun retirement. I probably myself would say, I'd rather just go back to work than worry. But the big thing is to do the planning so the worry's not there. With us, it always starts with that Tumolo Financial Retirement Checkup, and we offer that out to listeners complimentary. Our number, 860-854-3434.
Investment advice offered through Tumolo Wealth Management, a Connecticut-registered investment advisor. Content contained herein should not be construed as an offer or solicitation for investment advice or for the purchase or sale of any security, insurance, or other investment product. Please consult with a qualified financial, tax, accounting, or legal professional before implementing any ideas or strategies discussed here.